This is Boom Bust, broadcasting around the world and covering all aspects of our global economy in the 21st century. I'm Brett Jabor.
And I'm Sarah Montes de Oca here in Washington. And here's what's coming up today. A Phase 1 trade deal between the U.S. and China could be on the horizon. But we have heard that before, haven't we? Well, Jeffrey Tucker, the editorial director at the American Institute for Economic Research, joins us to discuss the possibilities and what this is doing to global markets. Plus, London's transportation regulator has stripped Uber of their license to operate in the city. Legal journalist Molly Barrows hops in the driver's seat to tell us what this means for the riding-sharing giant. And
more Chinese blockchain companies are issuing their own cryptocurrency rather than focusing on general blockchain applications. Cryptocurrency analyst Ben Swan joins us to break down why this might be an issue. We have a packed show today, so let's dive right in. A series of high-profile mergers and acquisitions leads our global report today. Brokerage firm Charles Schwab announced on Monday their official intent to buy rival TD Ameritrade in an all-stock deal worth $26 billion. TD Ameritrade stockholders will receive 1.0837 shares in Schwab for every share in TD held. This would be a 17% premium over the stock's 30-day average price, which was prior to the initial reports of the deal late last week. Since those reports, TD's stock has shot up 16% with a 5% bump on Monday alone. Schwab witnessed an 8% spike on the news as well. Now, we're going to transition from the finance world to the world of high fashion. Louis Vuitton Moet Hennessy has announced a deal to buy Tiffany & Company for $16.2 billion, confirming the purchase that has been in the works for a few weeks. LVMH will make the acquisition via an all-cash deal, pricing Tiffany at $135 per share. LVMH lauded the purchase, saying the acquisition of Tiffany will strengthen LVMH's position in jewelry and further increase their presence in the United States. On the news, stock in Tiffany is up more than 6%, while LVMH is up a mere 1.5%. And we're going to move into big pharma now. Swiss drug maker Novartis will take over the medicines company in an effort to secure a cholesterol-lowering injection called inclisiran. The deal puts them in a position to better compete with their rivals. Novartis will pay $9.7 billion or $85 per share for the transaction. Now, the medicines company shareholders will receive a 24% premium over Friday's closing price. After the deal was made public, the medicines company stock spiked more than 20%, with Novartis holding steady, up just 0.5%. And lastly, well, it's not all good news here in this story. Hewlett-Packard on Sunday again rebuffed Xerox's attempts to acquire the company for $33 billion and refused to open their books to the copy machine giant. HP contends the offer significantly undervalues their company and expressed uncertainty as to whether Xerox could raise the money for the purchase. Last week, Xerox said that if HP was unwilling to hold talks, they would look at the possibility of a hostile takeover.
According to guidelines issued by the government, China said it will raise penalties on intellectual property theft. This is an attempt to address a major sticking point in the ongoing U.S. China trade war. The world's second largest economy is also looking to lower the thresholds for criminal punishments for those who steal IP. The U.S. wants China to crack down on IP theft and to stop forcing American companies to hand over their commercial secrets as a condition of doing business there. The two countries are working toward a Phase 1 trade deal. They're very close to signing that agreement. The Global Times also tweeted China and the U.S. are close to that Phase 1 trade deal, and China remains committed to continuing talks for a Phase 2 or even a Phase 3 deal with the U.S. Earlier today, when asked about that trade deal, Chinese Ministry of Foreign Affairs spokesperson Geng Shuang reiterated China's stance on equality and mutual stance.
Regarding the China-U.S. trade issue, our stance is clear and consistent. We hope the U.S. side will meet us halfway, find a solution that is acceptable to both sides based on equality and mutual respect. It serves the interest of both countries and the world.
But the partial deal leaves the more controversial issues for later discussions. This leaves U.S. and Beijing officials, lawmakers, and even trade experts doubting that a Phase 2 deal will even be signed by next year. A Chinese official told Reuters, "It's Trump who wants to sign these deals, not us. We can wait." Reuters also reported signing the Phase 1 deal could slide into next year as Beijing demands for removal of more tariffs. Beijing officials don't anticipate discussing a Phase 2 deal before the U.S. election, in part because they want to see if Trump actually wins a second term. For more on the ongoing issues regarding the U.S. China trade war and the U.S. acquisitions that we just spoke about, we bring in the editorial director at the American Institute for Economic Research, Jeffrey Tucker. Jeffrey, thanks so much for joining us today. I want to dive right in and start with the ongoing trade war. Contrary to media reports, now both sides are saying that they're close to a phase one deal, but will we see the signing of that partial deal before the end of this year?
I think it's likely there'll be some cosmetic deal, if not before the end of the year, maybe after the first of the year, just for political reasons and for hopes that markets can begin to calm down. But I don't really think it's going to amount to anything. So here's what's really important, what to keep your eye on here. What China wants is a lowering of the tariff barriers so that then they can stop with this retaliatory measures. That matters more than anything else. The Trump administration does not want to budge on any aspect of the tariffs at all. This is very critical to understand. The tariffs were never really a bargaining chip. They were always a policy that Trump wants. In fact, he thinks the tariffs are his great contribution to the world. You know, he's reversing 60 years of American trade policy, and he thinks that makes him awesome and it's wonderful. And not only that, he believes that they're actually working for the American economy, despite all evidence. And nobody can convince them otherwise.
And let me ask
so this
you
is
this.
very important.
Let me ask you this. A lot of people are saying, and even the Chinese, whom I've spoken to before about this trade war, but I've been following this since the start of it, are saying that they expect the tariffs, or at least some of them, to remain in place even if a deal is signed. Do you believe that?
Yes, I do believe this. I don't think there's going to be any movement. Now, they might not get worse, but all the existing tariffs are specifically what Trump set out to do. Years ago, he set out, even during his campaign, this is what he promised, this is what he wants. He loves the revenue, and he thinks they're good for the American economy, again, despite all evidence. So I don't think there's any chance for China to win on this tariff thing. This is an implacable position by the Trump administration. It's time that Wall Street and world markets deal with it. The tariffs are a U.S. policy. You mentioned something about, you know, China negotiators waiting to see if Trump's going to win election. I mean, that I think is really true. They don't want this guy to continue this. And by the way, I don't either. I mean, I think this is a crazy policy. And in fact, I'm speaking for practically every important trader in the world, every market watcher, and certainly almost every economist, with the exception of the 2 or 3 that are working for the Trump administration. These tariffs are a very bad idea. So
yes.
Now, here's the other question: is like, what does Trump want from China? And I can tell you what he wants. He wants China to bail him out of the problem that the U.S. has right now in massive grain surpluses, especially in soybeans, right? So the U.S. has an industrial policy that is massively overproducing soybeans and corn. We're looking for markets for these things, so they want China to buy a bunch of soybeans that nobody in China really wants. Right. So this is essentially it, right? This is the problem.
Well, Jeffrey, and I think it's interesting that you mentioned the one thing that he wants. You know, one of the big issues that has been mentioned is IP theft, and one of the big concessions that China is now looking at is raising penalties on IP theft. And now this seems to be a very controversial issue, of course. But is this part of phase one, or is it moving towards phase two? I mean, is this going to move the needle when it comes to coming up with a deal here for China?
Well, okay, so Trump has made a big deal about this IP theft, and by the way, this is very popular in the Twitter sphere. Everybody's like, oh, China's stealing our IP. By the way, America owns no IP. These are all private companies that own their own IP. And the last
he is
thing
beholden
China
to
wants,
Tim Cook. You know that, don't you? I mean, Trump is beholden to Tim Cook. He doesn't want him stealing any of the Apple IP. There's no doubt about that.
Okay, yeah, that's fine. Yeah, that's all fine. But you know, here's the worst thing that China could ever do is adopt U.S. IP law. All right, so our patent system is a gigantic mess. Nobody understands it. It's full of trolls. It's hugely expensive. It costs billions and billions and tens of billions every single year. I mean, the idea that China should adopt U.S. IP law, particularly as it pertains to pharmaceuticals, is utterly absurd. Well, so what Trump needs China to do is to just send out a propaganda message. We're going to stop stealing. And by the way, let's just be clear what we're talking about here. In a global information age where anything can be reverse engineered, you know, the demand that China somehow comply with U.S. IP strictures is really hindering their industrial development. I mean, that's ridiculous. It's really ridiculous.
I mean, it really is IP, and with the U.S. trying to kind of reconstruct China and what it stands for, it seems. But I want to ask you about the markets that have been pretty much their highest level amid some trade uncertainty, right? They're a roller coaster. But is there any interest for Donald Trump to complete the trade war when markets have still been seeing some record highs? He's still touting the state of the economy of the United States. What do you think?
Well, I think you've asked a very interesting question. I've thought about this a lot. I mean, in general, in a macroeconomic sense, yes, unemployment looks good. The markets seem to be reaching new highs. And to me, that's a tremendous credit to the power of the global economy to overcome every attempt to mess it up. I mean, to me, that's like a tribute to the power of markets. However, if you look at a much more granular levels, things like the U.S. wind power industry or the steel industry, and people who rely on steels, like the Wall Street Journal article this morning on a keg company that looks like it's going to have to shut its doors because the price of steel is going way up and they're losing their markets. I mean, at a granular level, a lot of people, in particular agriculture, everybody's suffering from this trade war. So macroeconomically, it doesn't seem to be like causing a Great Depression, like Smoot-Hawley or something like that.
Well,
on the other hand, there is a lot of damage being done at a much more micro level, and it certainly has done nothing to restore America's manufacturing base. That's for sure.
That's true, and people are afraid of the R word, recession. Hopefully, it doesn't come to that. But you know, a lot of hands are pointing at that. Unfortunately, Jeffrey Tucker of the American Institute for Economic Research, thank you so much for your time and your expertise.